Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm joined now by Kim Iskyan, our international editor, recently relocated to the country of Ireland, where he's getting the best beer that the world has to offer, I hope. Kim, welcome back to the show. I want to ask you, you are someone who has always advocated investing overseas. We are getting so much messaging here in the United States right now about trying to buy American, trying to invest in American, trying to support American small business. Part of it's the US-China trade war. Part of it's just the economic recovery from coronavirus. What's your argument for why not to do that? Why should we not buy American and help our economy?
Well, Jessica, I think that buying American is a fantastic idea. However, I think as an investor, we have to look beyond just kind of patriotism, and we really have to look at what else there is in the world. And it's easy when you're in the United States, the world's largest economy, the dominant geopolitical force. It's almost easy to forget that actually 54% of global market capitalization is outside the US. 85% of global GDP, global economic output, is outside of the US. The vast majority of global economic growth, incremental growth on that, is outside the United States. So being the largest doesn't necessarily mean that you can't look elsewhere. And it's really a tendency of investors all around the world. There's something called home country bias, where we tend to invest in our home market. And you look all across the world, whether it's the US, whether it's Singapore, whether it's Australia, investors tend to hugely overweight their domestic market.
Well, it feels patriotic, for
Well,
folks.
it feels patriotic, and also you invest in what you know, right?
Yeah.
And if I'm sitting in Australia, even though the ASX is only 2% of global market cap, the average Australian investor invests nearly 50% of his capital in the local market. And that's just because he knows it. And is that a good idea? Well, I don't know. Probably not when you look at the bigger picture of global finance and diversification. You really want to be diversified. And if you're only focused on what you know, and what you know is your home country, you're just setting yourself up for a fall, because eventually countries' markets go through corrections, they go through recessions, and this doesn't usually happen all at the same time. What we've seen in recent months is, in fact, it kind of has happened all at the same time thanks to the coronavirus, but that's not usually the case, and being diversified is hugely important.
Yeah, I mean, that's something we often hear, is that we need to be diversified. But I think one thing to bring up here is that so many American companies are making the bulk of their revenues, or a significant part of their revenues, overseas. Is that one way to play this?
That is one way to play it, Jessica, but I think then we also have to look at which market shares tend to march to. I think that if you were to kind of slice up that data, you would find that even though a company might make, say, a third of its revenues abroad, its stock market performance is much more correlated to the US market than it is to any other market. And I think then you'd also have to look at really long-term performance of different markets.
There are some hurdles to overcome, but you also think there's a huge upside.
What I think I would do, I would take a small percentage of my portfolio that I would otherwise put in, say, the S&P 500, and I would say, you know what, I'm going to put this into a Vanguard emerging market index fund. And the chances, in my view, that it outperforms the S&P 500 over the next 3 to 5 years are pretty strong. And a lot of these markets have gotten absolutely shellacked by the coronavirus, and they haven't recovered like US markets have. So they have a lot more bounce.
Better time to buy now then.
They have a lot more bounce to come back, and it's a lot better to buy than buying a market that's, you look at US markets now, they're at historical highs. The economy is in free fall. We really don't know what's next. In a lot of emerging markets, we're not sure what's next, but the downside from what's next is probably a lot less than what it is in US markets.
Wow. Well, we will keep coming back to you for your thoughts and expertise on how to better evaluate getting in more investments overseas. Our thanks to you, Kim Iskyan. And if you would like to be connected directly to Kim Iskyan and his writing, you can hover on the screen now and click the subscribe icon. You can also subscribe to our YouTube channel and follow us on Facebook, Instagram, LinkedIn, and Twitter. Thanks for watching. That's all for now.